Let's pick up on the markets now. The JSE looking set to join mostly mixed markets this morning, with a major risk event looming later in the form of US inflation numbers. Well, let's try and dissect this now. And we speak to Jimmy Moyaha, independent markets analyst, joining us for some quick analysis about how the JSE is performing in early trade. Jimmy, good morning to you, sir. Your quick overview of how the local index is faring this morning.
Morning, Coley. Morning to the viewers. We've got mixed open in early trade. We've got the top 40 down just over 1%. We've got stocks like Naspers trading down some 4%. Stocks like AdCorp trading up some 6%. Mining stocks are starting off in the red, with Impala down about 1%, Kumba down about 1% as well. But we've got some positivity on the financial side of things. Nedbank trading up some 2% off the back of their news release. Sasol up 2% as well. And we've got Allied Electronics up about 4%. So overall, slightly mixed open from the local bourse, and we're hoping to see that the inflation data that we expect out of the US later today will give us a better imprint or a better indication of where we're heading from a US interest rate perspective and from a US monetary policy perspective.
Yeah, talking about inflation, Jimmy, China's annual inflation rate was at 2.7% in July 2022. This is up from 2.5% in June this year. What's driving the uptick there?
So the Chinese data, a lot of it has been quite mixed as well. The consumer inflation data being driven largely by food CPI, that was up some 6.3% as well, month on month for them, or year on year. And the PPI, the production inflation, actually coming in lower than expected. Expectation was it would come in at about 4.8%. From last month, 6.1% print, but it came in at about 4.2%. So while consumer inflation is going up, producer inflation is coming down. And from a Chinese data perspective, I mean, there's also conversations around demand and potential demand slowdown as we go into the rest of the year, into the rest of the quarter for them. That data and that demand concern there is going to drive, obviously, things around oil prices, consumer prices as a whole. We're looking at global outlooks and global growth outlooks from a forecast perspective, and those are also going to be impacted by the Chinese data.
Let's look at the commodities now. Oil prices easing in early trade after industry data showing that U.S. crude inventories unexpectedly rose last week, signaling a potential hiccup in demand. Jimmy, talk us through those developments.
Definitely. I mean, as we mentioned, the slowdown in global demand, the concerns around a global recession, the concerns around what could potentially happen with the Iranian nuclear deal, as that's now back on the table for hopefully the final time, or proposedly the final time. We know we've got the U.S. inflationary data that's coming out today. It's going to be key to watch. But the concern around global demand and the forecast for revised growth down from all markets and across all regions, whether it's the IMF and the World Bank have all revised down estimates. That's been driving the concern around whether or not there'll be a continued energy demand from countries like China that are such heavy consumers of oil as we continue into the rest of the year. So those concerns obviously driving the need for, or the supply possibility that the supply would outweigh demand at this stage, and that's what's dropping the price at the moment.
Yeah, let's conclude the conversation with a bit of company news. Nedbank Group delivering a headline earnings increase of 27% for the 6 months which ended in June, the 30th of June this year. Help us make sense of that performance.
Yeah, so Nedbank revenues came in about 11% higher. Their headline earnings per share, last week they gave guidance that we were looking at between 28 and 33% That number came in at 27%, of course. Their cost-to-income ratio is also coming down. It's very much in line with their target. They've set a 2023 or end of 2023 target of about 54%. They're coming in at about 56.2%, down from about 58% as well there. From an outlook perspective, they're saying that they're looking they're expecting the South African economy to grow by about 1.8%, which is just below the 2% that we know that the South African Reserve Bank has forecast for our growth. Nedbank's also come out to say that they're expecting another 75 basis points or 0.75% in interest rate hikes before the end of the year, taking our repo rate up to over 6%, our repo rate up to over 6%, prime to probably closer to 9% mark there as well. But overall, from a numbers perspective, they're having a very good. They had a very good first half of the year, and expecting that forecasts will remain in line with guidance for the financial year end for the second half of the year, as well as on track, as I said, for those 2023 or end of 2023 targets.
Independent markets analyst Jimmy Moyaha, thank you very much for that markets update.